How will you be affected by Chancellor Rachel Reeves' potential tax raid on middle-class professionals? Ahead of next month's budget, in a bid to fill the black hole in Britain's public finances, Rachel Reeves is eyeing up a £2 billion tax grab on the middle class. Figures emerged on Tuesday that Labour's expansion of the state has caused government borrowing to skyrocket to levels not seen before or since the pandemic. Welcome to the Bullion Advantage, the podcast giving you weekly insights into key global events, markets, whilst also helping you protect and grow your wealth with physical gold. Everyone wants to make money in the most tax-efficient way, right? Well, you're going to want to listen to this. The Treasury has not denied claims that Rachel Reeves is considering introducing a new levy on you if you're operating a limited liability partnership. This is all part of an effort to raise funds for public finances. LLPs have certain tax benefits for working professionals, including doctors, lawyers, solicitors. That could be stripped to the tune of around £2 billion annually. To speak about this in more detail and so much more, backed by popular demand, we've got Garry, one of the gold specialists at Direct Bullion. Garry, thanks so much for being with me again today.
Hi, Jake. Thanks for having me back.
No worries, backed by popular demand.
Thank you very much.
So let's start off. Why do this government keep targeting the middle class?
Well, I guess it comes down to practicality. Middle class forms the largest segment of taxpayers, and their income is easiest to track and tax compared to large corporations or the ultra wealthy who have access to like sophisticated tax planning, offshore investments. So while it's politically unpopular, it's easier to tax the revenue at source when the government face shortfalls. And the lower income taxpayers normally have like fail-safes against it that stop them from being able to do that.
I see.
And rightly so.
Easiest way to go, I guess.
Indeed.
What are the risks then of targeting the middle class for these taxes, maybe economically or politically or both?
Well, economically, higher taxes can dampen consumer spending, disencourage investment and reduce savings, all of which slow growth and slow the economy.
I see.
Many professionals might also consider relocating, restructuring places like Dubai, Portugal. We've seen it in Switzerland and in the past, and just offshore areas, and restructuring their finance to reduce tax exposure. You can do that through like offshore investments or never taking money out, so it's not a realized gain. Politically, it risks alienating a key voting bloc that traditionally drives economic stability and supports public service through consistent tax contributions every year.
Got it. Just touching on something you just said, it's been mentioned a couple of times in this podcast. What is the appeal of Portugal at the moment? This is something I'm not...
It's a tax... Yeah, it's a tax haven.
Right, okay.
So you can... They had the non-dom status. They've kind of got rid of it. They say they have, but there are other ways around it for the ultra-wealthy.
I see.
But that's why they go for middle class, because middle class, they're not rich enough to restructure and move abroad. But they're not, they're not poor and they're not real low income where they've got no other choice. They literally are stuck and there's nothing they can do about it.
Right.
When they see the lower income people not paying much or paying at all, and sometimes rightfully so, but it can be tough for middle class workers now, especially with the way that I think the budget may go, which I think they're going to tighten the screws.
Yeah, we're going to get into that later for sure. Is this really just a reaction to the government overspending, and this is their way of getting the money back?
Well, in many ways, yes. Most governments have spent heavily in recent years, and that can be on different things like public health, social programs, and one of the main ones is servicing the debt that we already have in the country.
Yeah.
When you like anything, if you take a loan out, you don't just owe the money, you owe the debt or the interest on the debt. Yeah. So, we struggle to even pay the debt down, pay the interest down, let alone the debt. So, yes, now they're trying to rebalance the books by raising taxes on the middle class especially, can try to be like a quick fix in plug in fiscal policy. Yeah. Though it rarely addresses the deeper issue of long-term spending discipline, which we have none of in this country.
No,
None. And we have it on certain areas,
Yeah.
and for other certain areas we have no discipline at all. So yeah, I think that it is a way to help with government spending and just a way to get it back.
Yeah, and that ill discipline's not even just on Labour, to be fair. Like,
No,
it's previous governments as well.
And that's been from Tories to Labour. I mean, last Tory government, was terrible.
Yeah.
We had some really bad financial and fiscal decisions.
In your opinion.
In my opinion, indeed. Yeah, in my opinion.
But, we can get into this topic of people aren't going to be happy about this. People, the middle class feeling the pinch already, going to be really unhappy about getting taxed more. Do you think the government will listen to any feedback, or do you think they'll just put these heavy taxes on anyway because they need to get the money from somewhere?
I mean, for me, public pressure, it can influence policy, but not really. Not fiscal policy.
No.
It never
not
really
usually,
changes
no.
it, because they've got this black hole that they must, I guess, plug. They have to get it from somewhere, and it's an easy way to try to get the money is from the middle class. Governments may soften the language or introduce smaller incremental increases rather than like headline, tax grabbing statements.
Yeah.
However, unless spending is reduced, some form of tax rise is I guess inevitable in this case, because we have to, the deficit has to slow down.
Yeah, exactly.
Or even it has to go the other way. We can't keep borrowing like this without, our books are not balanced. This cannot keep continuing.
Yeah, even like we've discussed previously in the podcast, it looks like they're definitely going to freeze the income tax thresholds, and that's a stealth tax.
Yep.
Perhaps a couple of other stealth taxes
Indeed.
coming along the way as well. Given these potential tax pressures that people are going to be worried about and might maybe come into in a month's time, might we see more individuals looking to alternative assets like gold, but maybe other ones as well, if you just want to talk about that a little bit?
Yeah, I mean, absolutely. When people feel the squeeze by taxes, or they're uncertain about the future value of their income, whether that be investment, whether that be actual earned income, residual income, they look for assets to preserve the purchasing power. Now, that doesn't mean they're looking for high interest bank accounts. It means that they're looking for areas that are going to retain the value of the money. Not like the pound has done, or the dollar, or the euro, or the yen, that we've seen massive decline in purchasing power. We're talking about just stable, secure assets that continue to protect wealth for years and years and years. So somewhere like gold, silver, but gold in particular is viewed as a hedge against inflation and government policy risk. It's tangible, it's globally recognized, and it historically, retains value even when the paper currencies and fiat currencies lose value. Now, that's not to say that it's, this almighty asset class that's just goes up and up and up, because it's not. As we've seen this week, we've had a slight pullback. But the reason we've had a slight pullback, Jake, is for a few different reasons. But the main one is profit taking. Gold is a real market. People buy and sell.
Yeah, of course.
You are allowed to sell your gold. You are allowed to get in and out of the market. And that's natural.
Especially when the price has been as high as it's been.
People was buying this stuff at £800 an ounce, and now they're at 3,250.
Yeah.
People are profit taking, and so they should. They took the risk on gold at 800. Now they're reaping the rewards. So all I can say from that is it's created an opportunity for people to get in the market that, is a slight discount than where we was previously.
Yeah. So what role could gold play in a portfolio when the tax burden increases, inflation rises, and government debt is this high?
So gold acts as a kind of a stabilizer. It doesn't rely on government promises or company profits, so it can offset volatility in other parts of your portfolio.
Right.
Generally speaking, historically speaking, when the markets are volatile or uncertain, or there's geopolitical risk, people move money into gold because it's deemed as an Armageddon or safe haven asset. During times of high inflation or fiscal stress, gold tends to hold value or even increase in value, helping investors and just everyday gold purchasers protect their wealth when traditional assets are underperforming. Now we're seeing asset inflation, not only just inflation in, you know, goods and services in supermarkets and other services that we may purchase. We're seeing it in everything. So I just think that, you know, during this time of high inflation, that's why we're seeing record numbers of buyers. You know, as a business, we're seeing record numbers of gold purchasers, and it's becoming hard to get hold of gold. I mean, it's like you just go out there at the moment and go on all the big bullion dealers, make a large order, only very, very select few can fulfill that order.
Like you've just said, people are buying gold in record amounts. When tax uncertainty is this high, people turn to gold. Is that people trying to maybe preempt what's going to happen in the next budget, or is it just in uncertain times people turn to gold?
I mean, uncertain is, you know, an understatement at the moment, but physical gold, I guess, you know, provides a sense of security. Unlike digital assets and paper-based investments, it can't be easily frozen. And we've seen our brand ambassador, Mr. Nigel Farage, have his account shut down by NatWest/Coots for, in my opinion, and again, this is my opinion, no other than, you know, political and his, you know, political opinion. You know, it can't be just devalued or inflated away. In uncertain tax environments, people often prefer something that they can directly own and control outside of the traditional financial system. And that's why we're seeing, listen, we're obviously gold bugs, but things like Bitcoin, cryptocurrencies are becoming more and more popular. That's why they are now $1 trillion markets. Ethereum, Bitcoin, these are cryptos that are, in my opinion, they're here to stay. They are going to, gold and crypto will change the you know, financial ecosystem in the future.
Excited about that?
Really? Yeah, I think that decentralized finance, gold, physical and tangible assets will now, again, because it's not just, and again, this is my opinion, but the trust in the system is starting to, you know, it's starting to fade away. I think after COVID,
really, yeah, definitely since COVID.
I think people started to wake up. And people started to really look deeper than just the headline news. They started not just headline readers. These people are now reading articles. They're not all trusting, which I don't think we should be all trusting in anything. I think we should always do our own due diligence and digging to make sure that whatever conclusion we come to is something that's, you know, from an educated decision.
Yeah, definitely. So tell people why gold is a good way to get peace of mind in these times.
So gold isn't about short-term gains. It's never been about that. It's about long-term resilience. You know, whether you hold that as bars, as coins, as part of a diverse portfolio, or in your pension, it can act as an insurance against economical and political uncertainty and geopolitical tensions. For many investors and purchasers, the peace of mind that it gives is just as valuable as the metal itself, because you know that if your stocks and shares are underperforming, generally your gold will be performing. Yeah. So you buy gold in times of uncertainty, in times of, you know, political uncertainty, as I've said. And yeah, I mean, I can't see the world being very certain, or
not for a while.
Not for a while at least. And I can't see the tension slowing down, and that's all across the globe.
No, for sure. And I think one of the most worrying things is inflation, and it's frustrating to see Labour come out and say, oh, inflation hasn't gone up, it's still at 3.8%, but the target's always been 2%. And that's a bit concerning. I read an article about a bottle of orange juice in the shop is $5.30 now. We've spoken before about a pint of beer down the pub. It's getting a bit ridiculous,
especially here in Canary Wharf.
Yeah, exactly. It's getting towards £8 for a pint at the moment. Do you think inflation has any factor into this, or is it just the borrowing that we've spoken about earlier?
So for our purchasers, Jake, we've seen it change over the years. You know, gold used to be something that big investment banks and family offices purchased to preserve bits of their portfolio. It wasn't really, the general investor never purchased physical gold bullion, you know, probably 20, 30 years ago. But what's happening now is, you know, you get packet of Lurpak butter.
Lurpak spreadable.
Spreadable, indeed.
We love it.
I mean, we're talking £5-6.
I know. It's insane.
So butter and orange juice is £11.
Yeah.
That is
crazy.
That's an hour for, minimum wage workers. That's an hour of their work. That shouldn't be the case.
Well, exactly.
So if your money is not at least growing at the trying to track inflation, then I think that there's a real big problem because you are eventually going to be wiped out by inflation. And inflation is hard to understand sometimes, and we spoke about it before, but
yeah,
it's a real life stealth tax because it's not visible. It's something you can't see, and sometimes you can't feel it.
And it's a choice the government makes to print that money as well.
Yeah, I mean, so what happens is let's just say you've got, easy maths, £10,000 in the bank, and you're getting a return from your bank of most of our listeners, let's say 2% per year, and that's good. That's good going for them.
Yeah,
that's good going for the normal everyday current account. Now, if inflation's at 3.9%, that means every year they lose 1.9% of their money.
Of their buying power, yeah.
Because although that it doesn't go down on the screen, what they can purchase with that money becomes less and less and less and less. So I think gold, among a few other assets, is some of the only things that you can purchase that can keep up with that level of inflation year in, year out. Yes, sometimes it has better years than others. Sometimes it's not as great as others. But generally speaking, it's an inflation-beating asset that's physical, it's tangible, and if you buy it in coin format, British coins, is a tax-free asset that you can have in your portfolio.
Yeah.
And it's becoming increasingly popular.
Yeah. Exactly.
It really is. It's becoming increasingly popular, and it was a well-kept secret for a long time. I mean, before I worked here, I didn't know that the gold coins was tax-free.
No.
Did
Definitely
you?
didn't know they were capital gains tax-free.
Yeah, that's what I mean.
Yeah, and I had no idea that you could put gold in your pension before I started here.
Same here. I mean, some of the bigger companies still don't allow you to do that. They only allow you to do it in financial format, like in the form of an ETF or an ETC. Some companies that we work with, like XPS and Investac, they allow you to buy physical gold in physical form. That's actual real life bullion bars held in vault in your name. And it's, since we've started on that journey, it's just become increasingly popular with all types of clients that hold their own SIPs, because SIP is a self-invested personal pension. So the clients who have them want to be in control of the money. That's why it's a self-invested personal pension.
And that's why we're here. Got to get the information to the people.
We have to. For them to make their own mind up, it's our job to get the information out to them. It's their job to decide what to do with it.
We want to help you guys. We want to help you. Garry, thanks so much for being with me today.
Thanks for having me again,
really
Jake.
Appreciate your time. And
Thanks, guys.
We'll see you soon.
Speak to you soon. Bye-bye.
Bye. That's a wrap for today's episode. With the government set to come for your cash and the economy feeling more uncertain by the day, it's no wonder people are looking for safe havens. Can you trust this government to help with protecting or growing your wealth? Or are they just looking to make more and more wherever they can? One thing is certain though, gold will protect you from these incompetent chancellors. If you've been listening and think it might be time to take a closer look at gold, you should get a copy of the guide to tax-free gold absolutely free. Simply visit guide.directbullion.com. That's guide.directbullion.com. Also, don't forget, hit that subscribe button on YouTube, give us a like, please. And if you're listening on Spotify, remember to follow so you never miss an episode. Next time, we'll be unpacking the latest Robbing Rachel report, as well as all updates from the next week or so. So for now, share this with anyone who's on the fence about gold. Comment below and we'll answer your questions in the next podcast. But for now, this has been the Bullion Advantage. Thanks so much for listening. The purchase of gold does not constitute an investment or offer financial returns. Gold is considered a store of value and not an investment product. Past performance of gold is not indicative of future performance. Prices and values of precious metals can fluctuate and are influenced by various market factors. Direct Bullion does not provide investment or tax advice and recommends that you conduct your own independent research before making any purchasing decisions.